January 26th, 2023. Hey, I got that. All right. Some stuff coming into the channel. Stuff I want to make very clear starting out. I am not a trading guru. I am not a trading teacher. These videos are not out here to teach you my lessons or have you come buy anything or do anything like that. You should consider this a student's practice, a book report, if you will, on what happened during the trading day, how the market moved, and how I performed with inside of that. And then maybe some commentary around some of the narratives in the market, okay? So that's really where I want you to really focus is this is not me teaching you. If I say something you disagree with, by all means, leave a comment in the comment section down below. Let me know. I'm happy to make any corrections if I'm wrong. So God knows I've been plenty wrong. Okay, so coming into this morning, you can see going right into our TA, gapped up into here, immediate pullback into the gap fill. And then from here, you recovered the rest of the day. Pretty bullish day on the latter two-thirds of the day. Okay. All right. So pretty simple, not a very complicated chart, actually, so to speak. Was a little bit slow moving as far as this whole move up goes. Very interesting. So how did I do today? That's really the question. I have prepared a picture for you guys. Wait, is that it? Where is it? It should be here. Not that one. How about this one? For some reason, it's not pulling up now. Let's go. And this one? Nope. All right, never mind. It is not. Oh, there it is. Aha! Ta-da! Okay, so balance for today, you can see we're up $166. I had done a little better than that, and we will go through all of it as far as like how my trading went. Again, green day, some learning lessons as far as I'm concerned. All right, I'm going to go ahead and shut that down. All right. All right. Okay, so coming into this morning, I have, as far as my setup goes, I have two rules. Rule number one is, right around here, I don't really trade the first hour, and I don't really trade the last hour of the market. The last hour one, I'm becoming very religious about not trading power hour. Especially because I trade options, and around there, you're in the worst time for theta decay that you could possibly have. You could lose premium very, very hard into that time. Any wrong move out of your favor, it is not a good place to be if you're trading 0 DTE. So I do not trade 0 DTE. If you have any confusion about 0 DTE, that means 0 days to expiration. So in the last hour that contracts have to expire on the last day, you lose a lot of premium very, very quickly, and you can wind up really losing a lot of money. And I have before. I have absolutely. Hoping for a last minute miracle. So coming in this morning, I also don't trade the first hour. I find that the premium to delta ratios tend to be, the premium is way high in the first hour, a lot of volatility in that first hour. So I have set up for myself a time I'm not really trading the first hour. So even though you have this big, nice move down, you can hurt yourself very badly. For example, and this is just an example of what I watched today. I watched these guys grab these puts, move down here. They were very green on these puts. This move up here ate a massive chunk of those premiums. This move back into the $400 level made them from here to here. You would have made nearly the same money as from here to here. Okay, so there's a bit of this wobble room in looking at how deltas move, or how premiums move, and stuff of that nature. So so my first trade here was, it came in again, with the gap up close to the upper Bollinger Band on the daily time frame. I kind of thought, you're likely to have a gap fill, some profit taking, things of that nature going into here. Some guys looking to try and short this back down. And so, but I was still fairly well. There were three scenarios for me. The very first one was actually a move down to 50%, which is actually right here, to the 50% mark, and then a sort of a gap and go type of scenario. You can see here that we got the 50% retracement. We tried for the gap and go. We could not break above this swing high here. And so once that failed to do that, it came back down into the $400 level, finished completing that fill of that gap. Okay. So my scenarios were threefold: one, 50%, then to a gap and go. That's something that Peter Resnick teaches over at Shadow Trader. So if you're interested in learning that, you should talk to him, and he will talk to you. He's very approachable. The second sort of thing that I thought would be was that you would completely fill the gap and then go, and like we did here. This is what actually did happen. And my other one was that we'd fill the gap, you'd break the 400 level, and you'd just keep going. And either one of those, any three of those scenarios had sort of stipulations. Here you caught this, the bounce up. So that was in play. I was looking for a break then above the 403 level, or 404 level, I'm sorry, in order to catch some type of momentum as far as that goes. But you're really looking at your slow stochastic. You're looking here, you put in a higher low here and a lower low here. So that kind of gave me an idea of divergence. It was not going to happen as far as that was concerned. And then, so then you continue to sell off, and you set up really well into what is actually my setup. And my setup, we came down, we got into oversold, and then you created this bounce here. You failed to break above this previous support, which is now resistance. But then, so you set the higher low in, then you broke the swing low, but you immediately reclaimed the swing low. Okay. This is here. When that happened, when you reclaimed the swing low, it brought my slow stochastic out of overbought or out of oversold, which usually gives me my ride to the 18-day moving average, or 18. This is, we're on the 1 minute here, I believe. Give me one quick second. I got to pull this a little closer so I can see it. Yeah, so let me zoom this in so you can be a little more. Okay. All right, so you can see here, we came down, we created this swing low right here. You went up, you made a lower high. You came back, you started to break this. And the next candle immediately reclaimed it. And from here, I was able to get long into this position. So from here, what happened is I took a long position at the 404 strike price for the call side. We came up into this move up here. When we came up to here and we did not break past this previous swing high, let me see if I can bring that over for you guys a little bit. Whoops, not that. I'll see if I can bring that down for you a little bit. All right, so you can see that. Okay, so we came up and we didn't break above. We were not able to break above this swing high. I set in my stop loss here. It was pretty cool. I got this move. I'm up about, $80 at this point. So I go ahead and I set a stop loss. My goal is 125, but I did set my stop loss at about a $5 would be a 5-cent gain for me for a $50 win. Pulled back into here. And then what happened is we proceeded to slow the price action. one of the things that affects the extrinsic value, which is what I'm trading on of our contracts, is volatility. So when the volatility began to move out of this, it slowly just came down, and it did fill my my stop loss right there. So I did stop out for a $5 win on that. We'll go to the next trade that I had set in here. And this is where things really got cool for me on this second trade. And again, even though you have this move up, you're losing volatility here, right? You're not moving directly. So extrinsically, your contract is losing money, even though you're above down here, you are losing money. So as far as that goes, so I did stop out into, it was probably right back into here. And then we started to get this bullish sort of price action through here. Even though you can see we're grinding down, it's still pretty bullish. And then again, as the slow stochastic came off of oversold, I was able to take that move again for the move through. I traded the same 404 contracts here. I was for the break above. This time I then also was trading with my stop loss. And I was able to, as we continued to grind up, we held those values. I moved my stop. I was in at about 20 cents. I moved that stop up to about 30 cents. The other thing too is I have two charts now that I watch. I'm watching this chart of the SPY, but I'm also watching options of the price action on the contract that I'm into, the position that I'm in. So that one, we had a really strong support on the 404s at about 30 cents. So I was holding that 30 cents. As we moved up, we did the break above 40 cents. I moved that to 35. Eventually, I moved it to like 38. I got out of there. This second round, I was in at 23 cents. There we go. I remember. I was in at 23 cents. I actually moved my stop up as we began to trickle. I moved my stop up as we began to trickle back into this. And again, you can see here as we began to trickle back into this. And then I did stop out again. I am trying to use stop losses more. I'm trying to not sell the top. I'm trying to be able to hold for the longer move. So that is something that I'm trying to do. Now, we came into this, we pulled back, and then we go ahead and we get this next big sort of leg up here. Again, the thing that's cool about my options premium watching this, my calls, I left about 10 cents on the table with this move right here. Okay. That was relatively challenging for me. I would rather just take the win than sit here through this part. But nonetheless, I was trying to trail the stop loss. I don't want to play the guessing games. So at one point I'm up about $260 on this trade right here. On the day. And then where I really lost it was in my last trade of the day, coming into the last trade of the day. And this is something that's pretty interesting here. None of this from this point on, none of this on the long side is my setup. We are up here. We're hanging around overbought. We're grinding up. So this third trade was really a problem for me because it was not my setup. Okay. This thing just remained kind of in this grind upward, this bullish grind upward, very, very challenging. And so now, and what I did is absolutely stupid. Okay. It was absolutely asinine what I did with this last trade. Coming into here, the break below, I see it's holding along this 18 MA. And this is I believe I'm on the 5-minute chart, right? It should be on the 5-minute chart. Let me see. Yeah, we're on the 5-minute chart. Let me go back to like the 3-minute chart. Okay. So we're on the 3-minute chart. There we go. That gives me a real clear picture. So we're on the 3-minute chart. We get this pullback into the EMA to the MA, the 18 MA on the 3-minute, and it just continues to hold and rise in that direction. My initial thought is that there's some type of, other breakout coming. And if you look at some of the bigger time frames, like the 1 hour and the 2 hour, you had a setup for a breakout on those charts, but you did not have my setup. Again, you can see even on the 3-minute, you'd already made the move out as close to oversold as you possibly could into that high spot. And that took, that took a lot of firepower to make that one move absolutely happen. And so where I got into this, I came into the pullback here thinking here's a pullback into a breakout type of situation. And so I went ahead, I bought the 405 calls. I'm held all the way up into here. I paid 20 cents for 10 of them. So I was in $200. Which is fine as 20% of my account. That's typical position I should be in as the max. And what happened is you got up here, and as you got up into this region right here, you began to run into trouble. And these tiny little pullbacks began to eat at my premium. And I thought, well, yeah, but we're still grinding in the same direction. So at the 20-cent mark, when we got down to around 10 cents, I averaged down. Now, for me, this is bad because I have a very strict rule about not averaging down. Averaging down is bad. There's a difference between averaging down and adding to a position. So where I would have been fine to do this had I caught this first move up, taken some off, then added to this, it would have been a successful trade. But I'm not even into that level of trading yet. I have not proven my consistency enough to even be doing that. So again, this is a really bad trade. In the end, I was able to stop out of this trade for around about $100 loss, giving us about $160 win for the day. So I'm grateful a little bit for that. Even though this kept moving in my favor, the premiums definitely didn't. And so that's really, and this is something that it's a trade I took late in the day. And again, did not have my buy signal in mind with it. Okay. So that's kind of how I did as far as trading goes. And the lessons that I learned from that, really these out of the money contracts late in the day are very difficult to see. There's a lot of times you're hoping for some type of miracle thing, right? Some amazing, and they do happen in the market. There's 2 days out of every month where you will get a really big rally into one thing or another thing, maybe 2 days a month where you get a rally, in your favor, assuming, I had picked the right direction, right? I had picked the right move. We were going up. But I picked the wrong contract. I averaged down that contract. I kind of FOMO'd in after this big pop already happened, hoping to catch another move up. And it really didn't, it wasn't good, right? It's not, again, not my setup. I need to stick to my setup. So I'm going to do that again. Could have been a better day. I finally had the account over $1,000. I blew it. But again, I'm not going to kick myself. I'm not going to have a hangover. I did well today. My 2 trades worked out very well. I traded my setup very well in those. I just need to remember to focus on my setup. So that is really it. So the one thing about it, and this is where I'm kind of go back to, because I put the title of the show today as When Your Setup Fails. And that was really where I wanted to focus. I wound up focusing into the failure, but what I really wanted to focus into was the first trade. Okay. I had that set up, and we didn't break above the swing high on the first trade, and it stopped out. As far as I'm concerned, my setup had failed at that point. Okay. And I was good enough to be able to stop out for a profit there, which was hugely beneficial. Okay. It was my setup. Stochastic came out. We were moving in the right direction, and we failed to break above swing low, or we tried to break below swing low, but we held. We came back and recovered that. Really opened the door for my setup. So, I think that's the thing that you need to be careful though of with your setup is, and that's something that I got to see work today, is how successful you can be when you're aware of your setup failing and you're able to just cut, you can cut your losses, or in that regard, I cut my winner, right? I stopped out for a profit at the first one. The third one was really bad. So I'm really happy. I'm really happy with the second trade I made today, but this last one was, I'm not even upset that I lost money. That doesn't bother me. The fact is, my goal here is to become a disciplined trader, right? So the real failure here isn't a loss of $100. I've lost hundreds, thousands of dollars, right? Where the problem for me became was I failed to adhere to my discipline. So, all right, we're gonna go to the daily chart, and we're going to go to the daily chart, and we're gonna go over some of the stuff. There's a couple of things I want to note on here. Okay, again, considering this as a book report, okay, this is stuff that I have learned about technical analysis. And if I'm wrong, by all means, and I'm going to say something in here that it could be wrong. I don't actually know, so I'm more or less asking the question. Okay, so if we go through our normal rigmarole, we are in an uptrend. Your bias should be to the long side because you're over the 18-day moving average. This is the daily chart. Each candle represents a day. And your momentum is now embedded on the slow stochastic. So now this is all of this for me. It tells me where we are in space time. Okay. You have all of this space up here, all this space down here, right? On the chart. Based on where you are in this space, different traders will behave differently. Okay. There's different traders who will behave differently. They will do different things. Overall, what I understand that I am supposed to be doing is kind of have an idea of what the big guys are going to do and move with them. Okay. Now, one of the guys I follow is a guy named Ira Epstein. And what he will tell you is if you have 3 days with the slow stochastic in overbought, where both these lines are over 80, that is embedded. And when you embed that, it usually means that the bulls will look to buy the breaks. So if this comes down, look for buying support to step in. And so that is something that that Ira teaches. Again, I don't know what happens, but the reason I bring this chart up, and because I have a counter sort of argument for that and for what's happening here, and I'm gonna try and make this big so we can all see it, especially your blind host. Okay, so this candle here, from what I've learned, has been often referred to, it can be referred to as a bullish hammer candle, an evening star candle, a shooting star candle. There's several different ones that's called. I think this one's more of a hammer or a shooting star or a topping tail. Either way, one of the things that I've heard about such candles is that this is a representation of buyer exhaustion. Okay. Essentially, they've chased the bears all the way up to here, and the bears have finally finished taking off their short positions. They've covered everything they're going to cover. Okay. So I want to be aware of this because as I understand technical analysis, what makes it work and what makes it not work is that we all know about it. And so as I understand it, this could be a peak for the S&P for the SPY. So I don't know if you know what that candle is or if it represents anything, if I should even really be thinking about it or talking about it. By all means, please let me know. It does appear to me to be, I would assume that candle is very bullish. Okay. The guys yesterday, the day before, though, said if you look at this candle, I would assume that's to be bearish. One, you're inside this candle. it usually signifies a reversal, and yet you still caught a move higher off of that inside candle. So I don't personally know. If you do know, please by all means leave a comment down below. Tell me what you think that is. I'd love to kind of find out what some of that information is. I'll look it up a little bit later on. I believe the pattern site has things like that. But the one thing about it is you did finish the day in the upper quadrant of the range. So I don't know. I did go back and look and find similar candles on the chart, and usually they're followed by red days. The three I saw were typically red days. I don't usually see, right? But you could gap higher and keep going. I don't know. We'll see what the morning holds. But that's something I wanted to point out. So anyway, that's going to do it for me today. That's my report. Again, comments, questions, concerns, leave them in the comment section below. The Russell Journal is written, edited, hosted by me, Russell Liss. We are produced by Social Media Shows. Our executive producer is Maria Pereza. And until tomorrow, I guess pretend we said some sort of catchphrase. Pretend we have a catchphrase on this stupid channel.